Okay, so hello everyone and welcome to a service manager's guide to understanding financial statements. In case you were in the wrong room, that's what we're talking about today. I am Sue Pitts and I am the director of the Small Business Development Center in Southwest Iowa in the Council Bluffs area. If you're not familiar with small development centers, in Iowa, we have, I believe, 15 centers, and I think John's going to show the map when he starts his presentation of where we're all at. But we're available to every Iowan that's either in business or starting a business, and we are free technical advice centers. So basically, we can help with your business planning, your business plans, your financials, and then when you're running a business, anything that you need help with in managing that business or growing that business. So I encourage you to, after this session, reach out to your center if you have additional questions or questions outside of the financial realm as well. We're certainly available for you, and a really great service throughout the state. So we are very pleased today to have, we're pleased in general to have John on our team. He has great experience and has joined the Iowa SBDC as a consultant, and it's such a great resource to have him. He has such great experience. I'm going to go ahead and read his bio, so it might be a little read, but easier for me to remember. So John is a certified business advisor with over 30 years of small business experience, including business ownership. Much of his career has been spent working to maximize the customer experience while still making a profit to sustain the business. Before joining the Iowa SBDC as a consultant, John was an SBDC advisor for the Washington State SBDC and an SBDC advisor in the U.S. Virgin Islands, a job that I'm going to go after soon so I can move to the U.S. Virgin Islands. He has extensive experience managing restaurants, hotels, assisted living facilities, and skilled nursing facilities. He also owned a restaurant and started his own janitorial services company, which he later sold. While in the U.S. Virgin Islands, John taught hospitality and business courses at the University of Virgin Islands, where he was an assistant professor. John holds a Bachelor of Science in Hotel, Restaurant, and Tourism from Florida International University, as well as a Master's of Public Administration in Long-Term Care from the University of New Haven. So welcome, John. We are very pleased to have you and excited for this presentation.
Thank you and welcome. I've been watching the information come up in the chat and some really fun restaurants and just all over the state. And I'm still getting used. I'm still learning Iowa, everybody. I moved here from Washington State on kind of a semi-retirement, and I wanted to get back to the Midwest, so here I am. And so thrilled to be here today. So as we're going along, especially talking about financials, some people, I've run into so many people that are, oh, I can't do this, or I'm not able to do this. And I just really want to start out saying, if I can do this, trust me, anybody on this call can do it. Because I am the type of, when I ran my restaurant, and I got smart. I hired a bookkeeper because I didn't like doing the books, so I brought somebody in to do the actual, put down the numbers, record everything, because I just knew that wasn't my forte. But what I am expert in is knowing how to read these, and I'm also very good at helping anybody that would like to learn how to take care of your own books. More than happy to assist you with that at any time. Again, working with the Iowa SBDC, for anybody that is not currently a client, I really encourage you to reach out to your local area or myself, and just the local SBDC, find out who's in your area. What a wealth of resources we have as advisors, and can help you through this entire process for you to be successful. Now, the interesting and the two things that I always love is, number one is everything that we do, we don't charge you for. Okay, so it's a free service in this day and age. That's a nice thing to have. The other thing is everything that you and an advisor talk about is confidential. We do not share any of that unless we have your written approval to do so. So anyway, today's journey should be hopefully fun. Some people may have more experience than others. So I'm going to be taking a holistic view of looking and for you to look and understand what you are or how you interpret your financial statements and how you can put things together so you have an understanding of what is going on in the industry in your business. So just to give you an idea of, these are national standards as of February 2022. I got this from 7 Rooms is a website, but here are the latest statistics. So the average profit margin for a full service restaurant is 3 to 5%. This is nationally. Quick service restaurants, 6 to 9%. If you own a bar, it's 10 to 15%. Catering, 7 to 8%. Quick service restaurants, oh, I have that in there twice. Sorry about that. 6 to 9%, and then food trucks, 6 to 9%. The interesting thing, so what does that really mean? If I look at the full service restaurant, it's saying that I'm going to take 5%. So for every dollar I take in, I get to take home 5 cents out of that dollar. That's how tight the margins are in this industry. So the importance of the financials really comes down to, you have a nickel to play with. If you don't control your expenses and you don't know where your money's going, or if you overspend on things, you may end up losing money. And statistically, I think we all know that the restaurants overall have a very high failure rate. There are many reasons, and I'll go through some of these later on in the presentation. However, one of the main reasons is, oh, I didn't know, I didn't realize I was in trouble financially. So to give this a little bit, put it in dollar and cents information for you. If you had a full service restaurant, and let's say you're at 5%, that means today, if I took in $1,000 in sales, okay, that means that $50 was my profit. $950 out of that 1,000 went to pay heat, light, and power, went to pay food, went to pay beverages, it went to pay all these other expenses. So you being able to really know what's going on in your business is critical. And that's what this journey over the next 2 sessions are. And I would like to say, please feel free, put the questions in the chat. I will have different segments where we'll break to answer questions that come through. And our hosts and my colleagues here, Sue and Brooke, will feel if there's a really important question that's relevant, they'll just jump in and ask that for us. So ask plenty of questions. I'm a food service person myself. We like to have fun. We work hard, and the whole journey here is hopefully that you feel that you can take some tools away to make your business really profitable. And it takes a lot of work. And one of the things we'll talk about is, how many more things can I do in a day? Well, I know the feeling. I've done it. I had a restaurant, and there were times where I felt crazed. And there's some weeks I had an 80-hour week, and it's like, okay, that's the industry, but it's how you manage it. Okay. So when we're looking at the understanding the success for a restaurant, having extraordinary, unique food and beverage and an amazing customer service, a lot of us do that really well. And I use, my favorite word is, how do you make it fun, unique, and exciting? I had a professor that was so successful in the restaurant business, and he was the president of the National Restaurant Association for many years, Mike Hurst, who had his restaurants were phenomenal. But one thing he told us is, and I picked up, is how do you make this fun, unique, and exciting? So that's a whole nother seminar in itself. Then your success, keeping accurate sales and expense details and tracking them via QuickBooks or some other accounting system. If you have a really small restaurant, it can actually be done on ledger paper if you choose, that's fine. But keeping those numbers, and as we go through this seminar over the, over this next 2 sessions, you're going to start to see, okay, if I have this report, where do I get these numbers? I'm going to give you some examples and show you how we find everything. So there's a lot of lecture behind it, and hopefully fun lecture. And then I do show examples of what's going on. The last one is, so it's keeping the accurate records and then forecasting your anticipated business for the future. A lot of people don't, in our industry, don't do that. They're going, oh, I'm just going to have sales. You really should be in the habit of keeping accurate, up-to-date information on what you've done to this point in time, which is today is the last day of actual numbers. Okay, and then tomorrow in the future is, what am I forecasting? Where do I want my restaurant to go? It's that combination of doing both of these that makes for success. However, for this particular boot camp, we're focusing on getting the actual numbers down. I would love to do another one where how we take, and I'll show you some tools that I use and we do at the SBDC on taking you planning the future, because that's so important for your business. Okay, I'm just going to take a second here, and restaurant managers that we're juggling so much, and how many times have I heard, I have to, how much more do you want me to do? I was one of them. The key that I found for myself in owning my first restaurant that I owned, and I've managed for large corporations. I've done, I had an Italian restaurant in South Florida, had a lot of fun. I grew up in a crazy New York Italian household, so I got to take all the skills that I had from growing up watching my grandmother cook and mom cook, and we had a lot of fun with the restaurant. But with that, I came in and I helped the family with that, because they were in the hole about $150,000+. So I came in with my knowledge and my experience, I turned it around, but it took me 80 hours a week to get that operation up and running the way it should. And once it was running like a top, somebody came in and offered to buy it. And it was so funny because the family members going, oh, we should keep it. And I said, I turned it around for you. It's time to sell this. And they made all their money back plus. And I was like, now I can breathe. And so I stepped into working back into corporate America. And I'm going, I'm back into working all these hours. But so many times I hear the people I work with and organizations that I go in. I was a troubleshooter going in and correcting restaurants, and it's not like going in like Gordon Ramsay type thing. That's not what I do. I go in and I look at the financials and I go, okay, here's where you are. Here's what you may need to do. It may involve restaurants, but I hear, how much more can I do? And I think it should be spelled D-O, not D-U-E. So sorry about that. The key for restaurateurs is to discover ways to balance all the operational areas that we have to cover on a daily basis. And the financials tend to be the one that get left behind. And I know how busy we are. We got the cook didn't show up, or the dishwasher called in sick. So you're greeting people, you're washing dishes, and you're cooking in between when the chef's getting uppity. Okay, these are things that's part of the business. At the end of the day, though, you have to find a way to spend the time to recap what's going on. Because if you don't track it, chances are that you may end up in financial difficulty and not realize it soon enough. In this industry, as I showed you on that first slide, you're talking a nickel per dollar is what you're taking in. If you have something go wrong, it can be really a problem area. So, and there's so many other areas that we'll talk about as far as, we have pilferage, poor location, as far as why my business might be hurting, poor staff and management, poor, what am I doing with my resources? The owner may not be involved in your reporting and your analysis of the business. All of these things come back on your shoulders. I get it. It's a way to balance it out. And we'll talk more as we go along, or please do ask the questions on, well, I'm doing this and I don't think I can afford a bookkeeper or a CPA. And if you talk to anyone at the SBDC, talk to myself, the skilled advisors will most likely take you on a journey that, hey, let's look at what you're doing, what your sales are, how we can move this around and put somebody in, because if you put that bookkeeper in, your time becomes yours, and it's precious time in this industry. So by really looking at everything holistically, it's like looking at a Rubik's Cube from all sides. Let's look and see if there's any way to put somebody like that in. So review and the topics for the 2 sessions. Part of this, we're going to be analyzing and producing. We're going to be analyzing and looking how production of financial reports are put together. And we're going to be looking at and discussing the income statement. Most of this session is going to be talking about the income statement, because that's what a lot of people know, and to get that basis done. But I'm also going to be talking about the cash flow sheet and the balance sheet. And I'll get into that a little further down the road. But all 3 of those reports, when you learn how to read them and you understand what's going on, you get a full view of your business. Because again, how many times have we said, you heard someone goes, so my income statement says I made money, but I'm not able to pay my bills. Well, that's because the owner is most likely not following what is their statement of cash flow. 2 very different reports that give you the ability to say, okay, here's where my cash is, and here's where we are as far as the income statement. They don't, it's the profit and loss, and by the way, the income statement and profit and loss are both the same report. So please don't get that confused. And I'd have no idea. I went and did some research. Why is one called an income statement? Why is one called a profit and loss? I don't have that answer, but it's exactly the same report. Okay, but the profit and loss, or the income statement, does not have all the information that you need as far as your cash and where the cash is going, because of the accounting system. And again, you'll see a little bit more of that later. So planning for profit, and then maintaining and improving the revenue control system. So that's the roadmap for the 2 sessions. Okay, so now I'm going to the introduction and the reports and the income statements. So the way this is going to work for especially the first part today is looking at the introduction to the financial analysis. Some of these things you may already know, but I just want to make sure that we start with an even slate for everybody in the meeting. I'm going to talk about the uniform system of accounts for restaurants. Very specific and important book. If you don't have it, I recommend that you'll get it. I'll talk more about that. I'm going to talk about the 3 financial reports. I just mentioned them. And then really do the deep dive into the income statement. And I'm using the uniform system of accounts for restaurants, that format, which, by the way, if you're not familiar, and again, I'll talk about it, this is the gold standard for our industry. The format that we look at for reporting all financial and financial transactions and where they go. And then I'm going to be looking at the analysis of the sales volume, the expenses, beverage expense, labor, and other expenses, and analysis of the profits. Let's talk a little bit now about planning for profit, because that's what we're looking at, all different areas of how we put things together, what we're doing. And especially as we're starting out, I've worked this many times, and I've done this seminar a couple of times. It may, if anybody's feeling a little bit, okay, where is he going? It does this all, how is this all going to come together? It does. So it's just watch how we pull this magic together, because it is going to actually, you will see this. Financials, especially for me, I'll be very honest, when I went through school, I did the accounting, I aced the test for the hospitality, restaurant, and hotel accounting courses. There was a huge difference between what I learned in class, which I call the book smarts, and actually getting in the trenches and putting this together. Our discussion today, by the time you're done, you will have hopefully the tools. And my goal is that you will have tools to start looking at this, and then keep asking the questions until you fully understand it. And there's never, if somebody emails me and says, I have a question about this, I'm more than happy to answer that for you. And again, I encourage you, reach out to your whoever your area SBDC person is, and get on board. It doesn't cost you a thing. So planning for profit, first, analyzing the financial statements is only the first step. During this, we will also look at during this seminar over the 2 days, we're going to touch on the financial analysis and profit planning, menu analysis, cost, volume, profit analysis, budgeting, developing a budget, and monitoring the budget. Will we go real deep into these? Probably not, unless there is a request in a certain area. Then I will adapt to that. So, and then maintaining and improving, the last part that I'll be doing over the next sessions, probably towards the end of the next one, is maintaining and improving the revenue control systems. And these are really important, especially today's day and age, and what we have going on with people hacking in. And are you being left behind because you're not using a point of sale system such as Clover or some of the others? And I have a short video that I may show today, and it talks about 5 different systems. The reason I bring this up is a point of sale system will make your life much easier, because it tracks so much of what you already need for your financial work and putting into the statements. You're not manually trying to take everything from the register and just put it into a spreadsheet, which could take 2 hours at the end of the night, versus having a point of sale system that you push a button and it tells you all and breaks down all the sales and the reporting that you need to transfer to your accounting system. So these are things that, again, just making you aware. When I talk about these, it's an opinion. Please understand that. I have an opinion on this. I'm not saying to run out and do something. You are in control of your operation. Probably my favorite line to my clients is, the only difference between us is I've got the gray hair. So I've been through the school of hard knocks, been there, done it. And I can't tell you how many mistakes I made along the way. So when I look really smart up here, trust me, I've been in the trench going, oh, that didn't work well. So this is hopefully, this should be, as we now start to progress into the different areas that we're about to go into that now, that you feel comfortable. Ask the questions. If you don't understand something, that's okay. If some people have already done this, they've done it a lot possibly. And I believe that anybody that is somewhat seasoned, you're still going to learn an awful lot about different areas and how we get there and why we do it. And those that are new to it, just keep working at it and keep asking those questions. We're here to help you on that. So, and I was just saying this again, my favorite line, if I can do this, you can master what we're going to cover over the next 2 sections. Don't let this make you nervous. And that's easy for me to say, but And I know just from taking seminars like this, it's like, oh, this might seem overwhelming. Go through it, go with it. And at the end, I really think that you're going to pick up an awful lot. At least have some knowledge on where you want to expand what you're doing and controlling your financials, because most businesses, most restaurants fail because they're not understanding and watching their financials. So I have time for questions here.
And I did get a question from, let's see, can you explain 30%, 30%, 30%, 10%?
For, are you talking about for the income statement? Good
No,
question.
that comes probably for me on 30% food cost, 30% labor cost, 30% overhead, 10%
Yeah.
profit. But of course, John, you've already mixed that by saying based upon the food industry, it could be as low as 6% profit as compared to 10%. And those are all goals that go within that.
Well, and Brooke, really what the 30-30-10 is not that far off. And I'm going to go into this in just a couple of minutes and in real detail about looking at percentages. It's that bottom line, though, that the 5 cents. But and I'll show you in just a couple of minutes here. Great question. What we're looking at is how we break down as an industry. And when we look at the income statement, so many times I've run into accountants and CPAs that do not understand our industry and do not report what how I'm going to show you what the standard is for the industry. So that question, I think I'm going to answer, and we will get to that. And if
there's one more question.
Yeah.
Are all POS systems compatible with QuickBooks?
No.
Yeah.
Not necessarily. So you need to do your research on that. I have a 5-minute video that I'm going to show you, and it talks about different point of sale systems, some that charge, some that don't. I had to be very careful working with the SBDC and, as a consultant, and also my standards. A lot of times you're going to hear me say, in my opinion, because it's really up to you. But just doing a quick Google search, I know that, and I'm going out on a limb here because I don't push one system over another. There are two that I really like. One is Square and one is Toast. And both of those, I believe, do integrate with QuickBooks. I know Square does, and I've had several clients that are very happy, but there are very good systems out there: Square, Toast, Clover, and all of these other systems. So it's really what you need, what you can afford. So it's doing that homework.
So just quickly, I've worked with some restaurants that there may not be compatibility, or they choose not to hook them together, just because sometimes that creates glitches. Mm-hmm. But your POS system is keeping such great detail that if you take that detail and just manually put in the lump sum into QuickBooks, you still have the records of the detail in the POS.
Very perfect. I couldn't have said that better. In fact, thank you for jumping in with that. And see, that's what you get, everybody. We have expertise all over the place with our Iowa SBDC. So the other thing that, I had a thought. This is the process of aging and getting older. It's like the thought went, and I call it, part-timers. But we were, for the point of sale systems, it is very easy to just take that information as you just heard. The other thing is, just a heads up, this is more technology in the future soon. I actually teach at a college a QuickBooks course, and all our material for QuickBooks desktop have been yanked. The QuickBooks Intuit is planning to do a major switch to just QuickBooks Online in the very near future. All the material that I needed to teach my classes, I used to teach the desktop version, And that is no longer available to me as of July 1st. So that's how fast Intuit, in my opinion, is moving. So if you just keep your eye open, they'll support, if you have the Intuit, I suspect they're going to support the desktop for quite a while, but you also then should just keep your eye and ear out to switching to QuickBooks Online if you're not there. So now we're finally here. Let's jump in, and we're talking about, first I'm going to go through just some basic terms. Some of you may know this, some of you may not. It's just really good foundation for what we're going to do in a few minutes. Okay. So what we have is an introduction to the financials, and part of management's job is to sift through information and select for analysis those numbers that can shed light on precisely what is happening in their operation. So, and then how much money did we make? How much money did we spend? How much profit did we make? Those are such critical areas for any of us in the restaurant business. And it happens so fast. We do audits and we do inventory and all of these different things much more than a retail business, mainly because things can shift that quickly. So it's, when I was in the hotel business, we would do a night audit. We balance the hotel every single night, including the restaurant. And we balance out to make sure that all revenue was posted, all expenses were posted, and that we are actually in balance. Because basically, if you don't do it right, the guest checks out. Let's say somebody checks out, and I'm going to go to, and if I went to them a month from now and say, hey, by the way, you owe us for 3 phone calls. You think they're going to pay it? I don't think so. So then our industry is very time sensitive, and that's why understanding these numbers is so important. So just again, when we're documenting and analyzing sales, expenses, and profit, that's sometimes called cost accounting. However, what I really encourage you to start looking and addressing it, the same activity is more appropriately described as managerial accounting, to reflect the importance that the manager or owners, you all, should place on this process. So, it's not just cost accounting. When you hear the term cost accounting, you are the bottom line. You are the one that has to understand what's going on in your business. Even if you have a CPA or a bookkeeper, which is great, if you can do that, I highly recommend taking the experts and letting them go through and put in the information and get the information into the books. But you have to know how to analyze it. You have to know what you're looking at to understand your business. So it's great. It's like, oh, I had a 33% food cost. Is that good? Is it bad? It depends on the operation. And we'll talk about that again in a few minutes. So again, we're talking about bookkeeping is the process of recording and summarizing financial data. So if you get it, you put it in, and you're just summarizing what happened. But managerial accounting is the analysis of that material, and that's what I'm hoping at the end of these sessions, that you are then able to start looking at your operation and understanding what these numbers really mean. So effective managerial accounting decisions rely on accurate bookkeeping. Right back to the beginning, garbage in, garbage out. I had my poor bookkeeper. I don't think I shared this one yet, but she would go crazy with me because I hired a bookkeeper. Take care of that paperwork for me, because I am so good at customer service. People love me out there. And when it comes to accounting, it took me a long time to realize it's like, that wasn't my forte at first. So, she'd come up to me, John, where's this receipt? I go, I don't know, make it up. And she goes, I'm going to kill you. That was her answer. I'm going to kill you. Because, the importance of keeping the documentation is imperative. Okay. So financials, when we're looking at the financial reports related to the operation of food service, it goes into, there are many different areas that are affected by good financial reports. Management, how am I going to manage looking at the operation itself. Am I making money? Is my food cost in line? Your stockholders or stakeholders, you may have investors that you need to answer to. Ownership, if you're managing, you have to answer to ownership or above. And, the financial reports are critical. If you have creditors and you need loans, government agency for taxes, so the general public. So the point being that the financials are more than just a piece of paper. They're critical for the understanding in a good, successful business. Okay, so introduction to the financial analysis. Again, this is still my intro. Do you need a CPA? Not necessarily. Managers that don't have certified management, a CMA or a CPA, they can analyze you don't have to have one of those guys to analyze and understand what's going on with your food revenue and expense. You just need to train yourself. Now, in 2002, just Sarbanes-Oxley Act, which is SOX, which I love that. Just for your awareness, you can go read the entire thing, but I just want to really make sure if you're doing your own books and if you're doing, and you want to make sure that you follow the proper protocol, because there are penalties for those that are found to have committed accounting fraud. And it can happen. So I always encourage you, if you're doing your own books, in my opinion, is once a quarter when taxes are due or whatever, have a CPA go through. It costs you a few dollars, but have a CPA go through and check your books. Make sure that everything is in line, because you want that expert eye to look at it. So that's my recommendation. On a minimum quarterly, have the professionals go through and make sure that you're on target for all your reports. Okay, so the National Restaurant Association has the Uniform System of Accounts for Restaurants. This is our gold standard, everybody. If you don't own it, I recommend at some point you can get on Amazon. It's about $70. And this is, if I have, let's say if I have an item and we're going to call it, I will say, to-go containers. This will actually, when you open up research, this will tell you what category that should be expensed to. A lot of people will go, oh, to-go containers, that's my cost of goods sold for food. No, it's not. Okay, and that's this, and we will, again, I'll do a deep dive into this in a few minutes. Okay, there are very specific rules in this industry that a lot of accountants and bookkeepers do not understand, especially following the Uniform System of Accounts for Restaurants. It says where everything should go, and we talk about the prime costs and we talk about revenue. All of these different areas are important, and this is the basis nationally in our industry. That is the standard on how we produce these financial reports, and they're very different from the general profit and loss statement that you may just see online. And okay, so 3 financial statements that you need to analyze for your food service operation. Again, we're going to concentrate most of the time on the income statement, also called the profit and loss. The income statement, or the P&L, shows the revenue, expenses, and summarizes the restaurant's financial finances over a stated period of time. It can be a month, a year. You are in control. If anybody uses QuickBooks, you know you can go in and set the parameters on what I'm looking for. Am I looking for the quarterly totals, half year, yearly? So you can, am I looking at last year's and this year's? There's all kinds of parameters that you can set in QuickBooks. The other one that a lot of people don't realize is so important is the balance sheet. A restaurant balance sheet shows the assets, liabilities, and equity to reveal a restaurant's financial position on a given date. That one is, and I think somewhere else in here I talk about it, but for those that don't know what a balance sheet is, I'm going to give you a quick 30-second lesson. If I own a restaurant, that is worth $400,000. Okay, that's I'm sorry, the formula is assets equals liability and owner's equity. And for anybody that their eyes are crossing, mine usually do with this. Okay, but here's how a quick way to understand it. If I own a restaurant, if I own the building, okay, and the restaurant, and it's assessed at 400,000, that's the asset. And then on the other side of the equation is liability and owner's equity. So if I have a loan against that or a mortgage of $100,000, that means that my owner's equity is 300,000. I have 300,000 of my money, or that's my equity into the business. And it balances. Yes, we have the asset, the building, 400,000, the mortgage or the payment that's due, 100,000, and the owner's equity then is 300,000. 400,000, they balance. There you go. You got a quick lesson in what a balance sheet is. It gets much more complicated, but that's basically what it's doing. That will tell me when I look at that, or a lender looks at it, and when you look at it, it will tell you, what is my debt? Can I afford, if I want to do a project, do I have, what are my assets? What do I owe? And you can start making decisions on it. And then the statement of cash flow, one of the most important reports that anybody can get, the restaurant cash flow statement, and that provides the data on cash receipts and payments for the operating, investing, and financial activities for the restaurant at a stated period of time. So, you know, every restaurant must be able to predict cash flow to ensure that they have sufficient funds on hand to finance or run their current operation. A lot of people don't know what this report is. So when we are looking at all three of the reports, okay, these are the numbers that give you a really good view of what your operation is doing. The income statement is a good start, but it doesn't give you the whole picture. Remember I said earlier, if, you know, people go, oh, the incomes, you know, on my profit and loss income statement, it said I made money, but I don't have money to pay the bills. That's because of the way the accounting system works. When you put numbers together on the income statement, there are certain things that are left out. If you're an LLC, you're taking owner's draw, that is not on the income statement. So you can be paying yourself, okay, but it's not showing up on that income statement, nor is it supposed to. So it's, again, understanding all three of these. And truly, I really need to say to everybody, don't, if you're feeling a little overwhelmed with this, don't, because if I can do it and understand it, you can, and we will keep doing this and working on it. And so just keep asking those questions if you would. So those are the three standard financials that if you just do a Google search, or if you look, anybody in the industry, any industry experts are going to tell you the same thing that I just told you. These three reports are critical. However, today we are spending most time on the income statement. Okay, so the income statement, also known as the profit and loss, the precise definition of term profit. So it just goes through and saying, this is really important that you have accurate information. And the one purpose of the income statement is to identify net income. There are more, again, we're talking where this statement kind of leaves off the other statements that we just talked about can pick up. So again, I'm using the system of accounts for restaurant for the format that we're going to do. All right, so the income statement, we break this down into 4 parts. We break it down into sales. We break it down into prime costs, which I'm going to talk about a little bit. Prime costs are a mixture of your expenses, your food expenses, and it is also payroll. So we're looking at the costs. Those two together create in this industry what we call the prime cost. Other controllable expenses, things that we have control over, and non-controllable expenses. Non-controllable could be as simple as city taxes and the tax rate. I don't have control over what the city is going to do. That is a non-controllable expense. All I know is I have to pay that. That is part of the expense for the operation itself. All right, so the income statement lists the revenue first, then expenses, and finally the difference between the revenue and expenses figures are shown up. If there's a if the difference is positive, that represents a profit. If the expenses exceed revenue, a loss represented by a negative number or the number of brackets is shown. So operating at a loss is often referred to as in red ink, and I had no idea where this came from and when I put it in, but shedding red ink. So I just kind of left it because I thought that was a unique line in there. All right, so the income statement sales by category include generated by all food and beverage purchases made by guests. So the sales category includes the revenue generated by all food and beverage purchases made by guests. The prime costs section of the income statement details the amount that was spent for food and beverage, as well as the total amount spent for labor. The prime cost is defined as an operational's total cost of sales added to its total labor cost. Okay, so the revenue and expense categories on the income statement are often presented in two ways: whole dollars and percentages. And just before I switch over, I'm actually getting to a sample here on the next slide. What I really want to emphasize to everybody is your percentages tell a faster and accurate story of your business. Whenever I was brought in to troubleshoot a restaurant that was in trouble, the first thing I did was look at, I didn't care about the dollar amounts. I wanted to see the percentages, because that tells the story of what's going on in the operation. Is something higher, something lower? Is it within industry norms? All of these can be answered by, and again, my opinion, go for the percentages first and insist whenever you print a report, if you use QuickBooks, go in and add this column, because it's going to tell you a faster story of what's really happening with your operation. Just for disclosure, the next two slides that I have, I've broken the income statement into two sections. And then I have a third one that shows the whole document. So when you're looking at this slide here, remember that there is a whole nother section, and I'm going to go there now, that we will talk about. Okay. So I'm going to start out here. So I'm going to remember what we were saying: garbage in, garbage out. Everything that goes into the statement, if you're not taking care to make sure your bookkeeping, you're capturing all your costs, that you're getting all your revenue, that all the expenses, if you don't really keep track of that, these numbers may not be accurate. So it's up to you as an organization, and you as owners, and you as small business operators. Just take the time and make sure you document everything that you need to and keep the receipt. I'm one, I have I use for, now I'm doing I have the consulting company working with the Iowa SBDC, and all my expenses, I use one business credit card. Everything I do gets put onto that credit card, because then I can make sure that I put that into QuickBooks, and that I'm reporting the revenue and expenses properly. So, and check anything that comes in for revenue, either cash or checks, okay, get deposited into that particular account, and very careful records are kept. So, income statement. First thing we start out with is sales. This is just an example. This is one that I use for my, I teach a food, beverage, and labor cost control class. And this is from I have the reference like somewhere down here. This is from their material. And so this is just a sample of Joshua's incorporated last year versus this year. Whenever you're starting out, read the top part of what you're looking at first. Make sure that you understand what report that you have, and make sure that this is what I'm looking for. Hang on, let me do something here. Now I can get fancy. How's this? Everybody see the laser? So as we're looking at this, the first thing that I do is, looking at, yes, it's nice. Okay, they did 2 million. And by the way, when I talk about these numbers, I round it. So I don't, you'll hear me say 2,000,005 and 2,000,003. It's just easier when we're talking these numbers. I worked when I was at the running and working in a 2,000 room hotel. We could have $1 million a day in revenue. So it was like, okay, when we're talking these numbers, it's just, right now it's okay to just talk in general terms. So food sales, beverage sales, okay, last year and this year, and my total sales, that equals 100%. Each year we're starting a new base. It's all this 100% is based on what my food sales and beverage sales were. Okay, and then we have, so that's 100%. Now, as I'm looking through, 81% of my sales came from food. 19% came from beverage. So if I'm making a decision, if I'm looking at my operation, it's like, what would happen if I increase and I was able to bring in more and spend more in my beverage area and bring that up to 25%? Yeah, 25% of revenue, mainly because I'm looking down here, cost of sales, 37.3% food cost, 20.0% beverage cost. I'm going, ooh, food, I'm paying out 37, just for food, 37.3 cents per dollar just to cover the cost of food. Beverage, I'm spending 20 cents, okay, out of every dollar. That means I have the potential to make more profit by pushing those areas. That's, again, quick, just fun and little analysis, but I just want to show you how you can look at the percentages. If I'm looking at 712,000 and 767,000 as far as food, what it's costing me to purchase food, that's what this is. Cost of sales is purchasing food. So when I'm looking at that, I'm going, okay, that number's hard to really say is that good? Is it bad? I don't know, because my revenue is different. So the percentage puts me on an even analysis, okay, to see either last month, this year, whatever the time period is, here's what I'm running this year, here's what I ran last year. They're very close. So it's like, okay, everything is in line. The cost last year for beverages was 22.8%. This year it's 20%. So technically, yeah, this year's looking a little bit better. As far as the beverage cost, it's gone down, 2.8%. So in overall, my costs were 34%. So again, what this means to anybody looking at the income statement, and especially if you have you have the projections and you have the income statement, that's saying just in this section, the cost for buying food, the cost for buying beverage was 34 cents out of every dollar I took in. Last year, it was 35 cents. So it's improved a little bit. That's where you can do, and that's where you do a deeper analysis later on. It's like, why did this improve? Why did my cost, did I have better control? Did I have better sales? There are all kinds of things that can answer that question, but you as the restaurant owner need to go through and figure out what that is, and we'll talk about that later. And then when we're looking at, again, labor, so cost of sales, we have the sales, that's our revenue. Cost of sales is including the food and beverage cost and labor cost. This is a huge difference from a lot of industry reporting on the profit and loss statement, because it is so critical in this industry. We put labor right up top. Okay, and Brooke had talked about and the question was 30, 30, 30, and 10. So as far as this goes for the expenses, here's your 34% for food. And when we look at labor, it's 32%. So there is part of that discussion that we had earlier. So management was, you can break this apart. Labor can be broken down any which way you would like. But to me, to break it apart for what is management costing me? What is my staff costing me? Employee benefits, if you are paying benefits, that is not necessarily critical. You know, some people do pay benefits, some people don't. So that number is variable in a sense. So then we have our total labor for this year is 825,000. Okay, and last year was 740,000. Notice the percentage stayed the same. Why is that? Because the revenue increased. We had, the percentage of total labor stayed the same dollar amount, even though the numbers, we went from 740,000 to 825,000. Okay, everybody starts seeing that if I just have these numbers, it's like, what does that really mean? The percentage tells me the story of what's really happening with this. And then we have total prime cost, okay, which is the total of your cost of your total cost of sales and your total labor. Okay, that's what we consider in this industry the prime costs. So these two, the 32.5%, the 34, and again, remember your percentages. You don't add percentages together to get the final number here. You have to use formulas, and we will be going through how do we come up with this formula to get this answer. And very simply, it's you're going to be, and I'll show you in a little bit, that you're going to be taking information from here and you're going to be dividing it, or taking it and putting it back into total your total revenue for your sales. That's how these percentages come around, and we will do some exercises with that. Now, critical point that is so important for all of you restaurateurs. Please hear this carefully. In the industry, we calculate and we do our reporting. You have your sales for food, and then you have the cost, everything that you spent for getting food. Okay, that is always food to food. You never mix anything else in that. And again, we were talking about to-go containers. To-go containers are going to be over here in your direct operating expense. A lot of people try and put this into the cost of goods. In the food and beverage industry, the food sales, everything that you sold for food is, and you calculate these numbers by looking at what the food actually cost you. In this case, the food for this year, I have spent and paid vendors, whatever, for just food items, 767,443. Then we have where our revenue is 2,058,376. If I take 376 and I divide it into my food sales, that gives me my food cost percentage. You've got to keep it separate with just food. Okay, and then beverage, the same thing. We have our beverage revenue, and then what we spent to bring in everything that we spent on beverage. And that gives us, I'm taking 96,566 and dividing that into the 482,830, and that gives me the 34%. Then here's the kicker, everybody. All these other numbers are based on total revenue. So I know it may sound confusing, and please ask questions if you're confused by any of this. Food to food, beverage to beverage, when you're looking for these numbers in this area right here. Everything else that we report on is based on, we will take all the sales together to report on that. Are there any questions so far, especially in this area? Has anything popped up, or anybody want to ask a quick question before I go to this next section?
So let's see. Would a very good POS system replace the bookkeeper?
Depend. I'm going to answer that with depends. If you are a really if you're a smart numbers person, if you have the POS system, you can most likely use the point of sale system to that you can put the information as Sue was saying, you can take that information and just put it right into QuickBooks. So possibly, I do still recommend that you then have your books inspected by a CPA or an accountant to make sure that everything you're doing is in line and that you haven't made mistakes. That is your safety valve there.
Okay, is controlled expenses and non-controlled expenses the same as variable and fixed costs?
No, we'll get into the controlled expenses. It in a sense they are, but there are some exceptions to the rule. So I'll be getting into that as far as looking at this next section when we're going about. Well, and do me a favor, would you repeat that one more time? I want to make sure I heard it right.
Is controlled expenses and non-controlled expenses the same as variable and fixed costs?
There's a lot of similarity, and I think there are a few differences, but it's just semantics in most cases, what we are used to saying. So chances are they're going to be very close, but there may be some differences.
So is it typical to split food and beverage? I group them. Should it be split?
Yeah, and that is, I encourage you, and if you need help getting that set up, please do separate them, because what you're doing is beverage, as you can see from here, beverage usually has a lower cost, okay, than food does. So when you're combining these two together, it's showing 34%, but you're not getting a real accurate picture of what your food cost is. And especially with, the supply chain issues and the constant increasing of prices, you've got to know how many cents per dollar that you are putting into food and how much into beverage. I know it takes a little bit extra work, but I highly, highly recommend that. And you can see from the uniform system of accounts for restaurants, this is the standard that they say you should follow.
So if they have a POS system that is keeping that track of that, is it necessary to, like, if they're manually putting it into their cookbooks online or whatever, is it necessary to repeat that, or could they just put bulk in there?
Oh, you can put the bulk in there. You need to, you'll see some more later on the, and I'm going to be talking about supplemental or supporting documents in a few minutes. So that's what the point of sale system can do. But by all means, especially it's, and again, garbage in, garbage out. If you have a point of sale system and you're actually, you're programming and your employees are doing it right, it's like, okay, I sold a glass of wine and they're putting under wine sales, or they're putting under beer sales, or they're putting under food. When you run that report, and if you have set up the system, and there's so much flexibility with the point of sale system that you can set up for the reporting for yourself. And the question is great. Yes, I have known people that have just taken the daily totals and put them in, or a monthly total, and they have that point of sale system as the backup to their documents. That's the key, is to make sure that you have the right documents, the report from the point of sale system, whether it's a weekly. I would prefer that you did it daily as far as review. And then, so it's really up to what you and your accountant say, but I'm a fan of keep it tracked daily because things can shift so quickly. Did I answer that one?
Yes. And then one more question. How do you get information on the uniform system accounting for restaurants?
It's simply, I would just, if you go to my favorite website in the world is Google. Just go into Google and you can get it directly from, directly from the National Restaurant Association, or you can get it on Amazon. It's about $70. So the publications are there, and it's really it is the gold standard for it. And again, if you have questions, where should something go? Where should that to-go container? Where do I put paper towels? This is going to tell you where you should put this on your financial reports.
Ryan, Google has it's the 8th edition. It is temporarily out of stock, but the paperback, that's on the paperback, but there is a used version at $67.23.
All right, super,
Amazon.
thank you.
You're welcome.
And that was from what, Google, was that Amazon?
That was Amazon.
Okay, and you might also, Brooke, I would suggest that they possibly contact directly the National Restaurant Association. For all of you that are in the business, they are a wealth of knowledge, and becoming a member is usually not that expensive. I encourage you to, and then you can say, I'm part of the NRA, and people are going, guns? No, restaurants. So
we have a very strong Iowa Restaurant Association too. So I would encourage to reach out to the Iowa Restaurant Association, especially during COVID and those things. They were a lifesaver for a lot of the industry.
Perfect. Thank you. Thank you. I appreciate that. See,
one more question. Should I separate my ice cream from my food?
No, that's it. The ice cream would be part of your food sales. And it just depends on, is that a different type of business? But my first initial reaction is, no, that's part of the food.
The only thing that I would say is if, when you're separating and splitting things out, it's because you want to know something. So if you want to know that ice cream isn't a good seller, or that you aren't priced right or something like that, then I would split it out.
Yeah, but as far as the final reporting, it should still go into food. But that's where, what we were just talking about, having the supporting document. I'll show you how that breaks down. But perfect, absolutely, I agree with what you're saying. And that's where a point of sale system or your manual system comes in. You need to know everything that you sold and where it's coming from. And that's a whole nother deep dive into menus and how you're reporting. How did I get this food number? Well, it's the culmination of everything that you're selling and the expenses that went into that. So more detail, the better, but that's a lot of times behind the scenes. And I'll actually show a supplemental in just a little bit here.
Hey, if we got one more question. I don't know if you saw that, Sue. I'm starting up my business. How do I get a projection of income without any prior years of history, which is basically your pro forma? I'm thinking about opening one up, John. How do I get to that pro forma?
Okay, and I will actually, when we go for, if you'll keep track, I will actually show a pro forma that I have that we use with the SBDC specifically for restaurants. So to answer that question is, you're going to look into the crystal ball. Okay. And what we're going to be doing is we will actually do what I do with my clients, and I have a lot of startups that I've done, is that we're going to look at what your menu is. I'm going to show you, or somebody will show you, you need to cost it out, how much every item costs, and we put that item together. Then once we know what the item costs you, then we're going to go, step 2 is to kind of roughly estimate what the selling price may be. And that's just history, what the gut is. There's a whole bunch of things that go into that. So I know what the dish costs me, or the item costs me. I know what I want to sell it for. And then the third step to starting your financial projections is, how many of each area are you going to sell in a month, in a week, in a year, whatever? And we actually go through a whole exercise. So by the time we get done with this, you have a good idea. This is, and we figure out averages. This is how many people I think I'm going to serve, or how many dishes I'm going to serve. This is the average, because a hamburger is, like, say, $8, hot dog is $2. We look at that and we come up with the average. It may be $5 or $6. And we put that in and the number of people that we're serving. And then we do that for food, we do that for beverage. And so then you've generated the revenue. And then we jump into the next part, which is figuring out all the expenses and payroll. It's a lot of work, but I got to tell you, if you do the pro forma, and that's forecasting, and if you do it well, everybody, and I got to tell you, it makes a world of difference in your operation. And for those that don't forecast, and not just startups, I encourage every single person here to start working at, here's where I am today, because you have some history. Here's where I want to be in a year from now, and start using these forecasting tools that we have so you can build your business and you then become the expert in your industry. This is the second part of the income statement. And as we're going along here, again, direct operating expenses. Great, I have a number. And again, in a few minutes, I'm going to show you how we came up with that number. So what I want you to do is, if everybody would write this down, 132, 143. Okay, because we're going to need that in 5 or 10 minutes or so. But direct operating expense, I can now come through and I'm putting music, marketing. These are other controllable expenses. Okay, and then non-controllable expenses down here. So what we're looking at, controllable expenses in this case, in this example, is direct operating expense. Again, those are uniforms, towels, whatever, that don't go under. Remember, I said you got to keep these separate. Okay, food to food, beverage to beverage, and then so that gives us, in the labor, that's our prime. So now we're going through all the operational expenses that we have. We have direct operating expenses, music and entertainment, marketing, utilities, general and administrative expenses, repairs. And let me tell you, the uniform system of accounts for restaurants, you may have 10, 15 other categories. It depends on your operation. So please don't think that these are the only categories. In this example, this is what we had. So if I'm looking, again, I'm going to percentages first. We had controllable income. So what we have is, controllable expenses is 434, 611, 398, 970. Now what I'm looking at, my expenses, the key again is the percentage. It was at 15.7% this year, 14.9% with inflation. My gut feeling is that's not such a bad shift. It's probably predicted, and given, especially after, for us, this report has nothing to do with COVID. I would suspect these controllable expenses have skyrocketed because of inflation, cost of food, and cost of labor going up so high, which again makes doing and understanding these reports even more critical, because things are changing so fast. You've got to stay on top of it. So then down here, non-controllable occupancy costs, rent. Okay, that's not a controllable expense. You may have signed off on it, but that is not that's not changing. I have signed a 5-year lease. By the way, this would be that non-variable cost. A lot of these up here are variable. So when we're looking at direct operating expenses, controllable, these are the variable costs, and the non-controllable would be the variable and fixed. So there's a lot of similarity. It just depends on who's looking at this. So I hope that answered that other question a little bit more. Okay, equipment leases, they didn't have any. Depreciation and amortization. Okay, I'm just gonna, I have to say this. A lot of times you'll have your accountant say, oh, you have a Hobart mixer that's worth $10,000. Each year you can deduct $2,000 as your depreciation, in other words, for the life of the machine. So in 5 years, it will be, basically you will not have any more of the depreciation. Please make a note for yourselves. Depreciation is there, and amortization, but especially depreciation, is there as a purpose. It is so you can start putting funds aside to replace that equipment in the future. So if you had a 2,000 for that Hobart mixer, you took $2,000 off as a deduction, as a depreciation. I encourage you, take that money out of the bank, put it into a separate savings account. So when in 10 years, your Hobart mixer goes to Hobart mixer heaven, that you are able to replace it and not go, oh, I had to buy a piece of equipment, I don't have the money. Excuse me, you had all these years that you were supposed to be putting that depreciation aside. I'm done with my lecture. So if that makes sense to everybody. So look at it. If your accountant is doing and asking me to put in depreciation and amortization, that's my CPA. It's like, no way am I going to even, they know the equipment, they know how to put it together. I let the experts take care of that. You can learn it, but it takes so many hoops to jump through. Or you can reach out and talk to Brooke or somebody and say, help me figure out my depreciation. Sorry, Brooke. I picked on you there, sir. By the way, you can tell we all work, this group for the Iowa SBDC, we all work really well together. And if I don't know something, I can reach out to any one of our colleagues and they will jump in and help us. It is an amazing group.
Thanks, John.
Yeah.
I do have a quick question that came in. I don't know if you answered, I stepped away. But can you give an example or explain controllable income?
After my prime costs over here, I have these expenses. This is the controllable income, is what was left after I had my sales minus my food, minus my inventory, minus my, the prime costs and minus the controllable expenses. So what it's saying is that cost me $343,000. So when I deduct, I had my revenue. When I deduct the when I deduct the food and the beverage costs and the payroll costs, this is what's left for me right now for the rest of the operation. Did I answer that okay? This is a subtotal basically.
Yeah, that's your income minus those three variable costs, which would be your which is your food cost, your labor cost, and now your controllable expense cost.
Yeah.
And that is kind of like a net income of controllable net income. And now we have to take out the non-controllable expenses. So everything above this line, you had something to do with, where below this line, the next phase is you can't negotiate your expenses. There's non-controllable expenses, which you hit. I can't control depreciation. I can't control equipment leases or the occupancy costs.
Yeah, very good. Thank you. So, and then I'm going to jump in here right now. Non-controllable expenses, occupancy costs, lease equipments. There's all kinds of different things. Again, this can grow depending on what your expenses are and what you have for your what your expenses are and what you have for your uniform system of accounts. And it just you can have 20 different items in here. It's just how you're reporting it and what you have in your particular operation. Okay, so the restaurant.
This also, I'm going to interrupt you, John. I'm sorry. The other thing is when we start talking about benchmarking and performas and this stuff, we want to use this kind of format so we can compare fast food versus full service and that stuff. Where are you running on your pricing? So that's why the standard code or the standard format is what we're looking for. Is that right, John?
Yes. Yeah. And when I show you the financial, I'll actually show you the cash flow sheet, which shows you a lot of the income and expenses and breaks it down for your industry. And it's a very special sheet. And for anybody too, that if you're not a master of Excel. Don't worry about it. I wasn't either when I started doing this. And it's like just time and effort and practice. I have one client that I worked with that they were in tears at one point right after they started about doing the financials. Now they can run circles around me. So trust me. And if I can do it, any of you can do it. So we will talk you through that. So, and then we go through non-controllable expenses. So the restaurant operating income, okay, is showing up right here. So really we're looking at it's down just a fraction, but for every dollar that we took in, remember back here, we took in 2.5 million. Okay, we're down to before income tax and before some of the other expenses, 10 cents on the dollar, everybody. Remember, this is why you need to know these reports and really work with them, because you did a lot of work. Now, again, McDonald's, Applebee's, small independent restaurants, do they make money? Absolutely. But the thing is, you need to control it, what it is, because the margins are so slim. So then when we get down here, we have interest expense taken out. So the income before income taxes is 7.5%. And then the final, we have to pay the government. Otherwise, they get really cranky. And for me, my favorite line is, I don't look good in orange, so I always pay my taxes. So the net income, look what we end up with here, 4.5%. Remember that slide I first showed you for a full service restaurant running between 3 and 5%? This particular operation, for every dollar they took in, at the end, the owner is walking away with 4.5 cents per dollar. Okay, now that is a simplified way to look at it, but it brings home the point that if you're not watching these controllable expenses, and if you can, what are you negotiating? During COVID, there were some occupancy costs were being negotiated all over the place to keep people in business. So
John, can I just jump in here real quick? In the state of Iowa, we have sales tax. And I notice that you have not put sales tax on here because sales tax isn't on your P&L. It's not your money. You're supposed to collect it and put it somewhere else. Do not intermix your sales tax debts with your profit and loss statements or anything else. And so many people miss that it's like, wait, I get the income and I don't have to pay it, but quarterly or monthly, but it's not your money. So every day or every week, you need to take your sales tax out, put it in a savings account because it's not your money. And that income tax at the bottom is also your estimated, if you're an LLC, and those could be your estimated quarterly payments or anything else. Again, your first year, you don't know what that is. And then the first year of a restaurateur, they automatically get hit with the estimate or their real income tax, and they didn't set anything aside for it. So those are two gotchas in the state of Iowa, or at least I've seen with our clients here in Iowa, is that sales tax get you and you don't realize it. So you've got to allocate that out. So thanks for letting me interrupt.
Oh, perfect. See, everybody, this is what makes such a great team with the Iowa SBDC. We all work together really well. The other thing too, that to just piggyback a little bit on what Brooke was saying, it's not only the sales tax, but if you have employees, you have your debt obligation that you've collected the taxes and Social Security for your employees that you are responsible for paying. And that should also be put into, along with what Brooke was saying, I highly recommend put that in a separate account in savings or a different checking account so you can draw on that. And anybody using QuickBooks, I will point out that make sure when you pay your taxes, you pull it out of the right account in QuickBooks. It's not just an expense, you have to pull it out. For taxes, you put it into a special account, and I can go through that some other time. Okay. I'm having trouble. There it is. I couldn't get my cursor. So then all expense ratios are calculated as a percentage of total sales, and I've talked about this, except food sales, the cost of sales for food, the food is divided by food sales, the cost, the food to food, and again, this other one, beverage to beverage. I think I pushed that pretty hard today. So please, and if you would like to at any point, just kind of talk to me about, here's where I was, how can I separate it? There's all kinds of things that can be done, but it's at some point, if you can, start separating it out so you really have an understanding of what's happening in your business. Now, this is from restaurantowners.com. I just grabbed this as an industry. This is a restaurant P&L or income statement, whichever you would like to use. But this gives you a pretty good, I like their version, as far as giving you a quick view of what's happening. If I had to make an analysis, this is for the current period, whatever it may be, and this is year to date. So as I'm looking at, if I were to just quickly look at the percentages, okay, I don't see, look at their food sales, it's 70, almost 80% of their business. And during the current period and year to date, I don't see any variance that would be setting me, okay, cost of food is really close between the current period and the year to date. So they're running at 32%, 33% food cost. Their liquor sales is, see that, 17.9. I love the now bar consumables. Just here is a little tidbit for you. When we're looking at bar consumables, because the formula is, again, how did I get this number? If I were looking at the food and I have my costs, so I'm going to divide 30,300 into 95,400, and that will give me 79.5%. So each one of these is done along with that. Now, bar consumable, orange, lemons, cherries, all these things, those are the bar consumables is the only exception. That is being, to get this percentage, we're dividing it into liquor sales. That's the industry standard, just so you know. But you want to keep track, if you put orange or lemons and you're using lemons and cherries and all this, you need to account. I mean, it can add up. Look at this, for a year to date, they used $6,500, and that's a lot of maraschino cherries, everybody. Okay, but when we're looking at that, that's 5.6%. If you didn't count it, if you didn't put it into your financials as a cost, you're going to skew your numbers. They're not accurate. So, but in this particular case, how we said beer to beer, in this case, wine to wine, but this one, bar consumables, is just the uniform system of accounts for restaurants, says all bar consumables will be taken out of your liquor sales. Why they selected that, I don't know. Somebody that really wants to know that answer, I encourage you, write to the NRA and National Restaurant Association and ask them why that happened. They'll probably roll their eyes and you won't get an answer for that. It's just like, why do we call it an income statement and a profit and loss? I don't know. So now when we look at, so here we go. Here's the total prime cost. This is, you saw two different reports now showing the restaurant P&L format and the or income statement format, both showing the difference between, and if you look at other profit and loss statements for retail or other businesses, you'll see that most likely it's not set up this way. The restaurants are. So then we have the total cost of sales, and the total labor is my prime cost. Okay, so then we go through, and then same thing here, direct operating expenses. Okay, music, entertainment, they happen to have some of the same categories. Okay, and then you have your controllable expenses, and thank you for that question earlier for that we talked about, is that we have controllable income for that period. Again, this is easier to see because we started out with the revenue, we took out we had the cost of sales, and we had the total labor, which totals the prime cost. So it's total sales less my prime costs less my other controllable expenses, and that's what we're left with right here. And then we go into our non-controllable, occupancy costs, and goes down, same thing. So what we're coming down to this operation, they're doing, and with what their numbers are looking at, they have 6.4% profit income before income tax in that one. And then that's the difference. The other one took out the income tax, I believe. And then we have this one before income tax. This is what a profit and loss statement shows you. But as Brooke said earlier, what this doesn't have is, if you're an LLC, I don't know if anybody here is an LLC, you take an owner's draw. Okay, an owner's draw shows up on the balance sheet. So it's not showing up in here. So it's saying, oh yeah, I have 7. So this is a snapshot of the operation, but you have the 3 reports that we talked about all need to work together. It's like a fine-tuned oiled machine that will give you the real picture of what your operation's doing. And we're going to go into that a little bit further. Any questions at this point? We've been asking along the way. I can keep going for right now.
Hey, John, we've got a great question here. And I'm going to defer probably to you and probably Sue. I don't know if you're still on here. But this is a good one. His question is regarding tips for an independent restaurant. Who is the best person or time to ask this question? How do you deal with tips? Do you want to deal with that, Sue? John and Sue, I'll let you all jump in, give your opinions. Everybody's got one.
I'll start out, and then Sue jump in, because everybody has different opinions on what to do. So first of all, reporting tips is critical. And so I'm going to take it from the standpoint of the owner. If you take credit cards, you need to track and you need to tax and show that the tip amount in each employee's check. You have to document that, and you also have a reporting responsibility at the end of the year to the IRS or to the state too. Again, I'm still getting used to some of the taxes with I moved here from the state of Washington, and we did not get taxed on things like that. So it's it's really up to the employee to make sure that they take care of that. As far as the operation and tips, I don't know. I'm still of a philosophy that when I had a janitorial company, I did that. I was a single dad, and I took all my experience in hotels and restaurants, and I trained in housekeeping in 4- and 5-star hotels. So I started a cleaning company so I had freedom to raise my son. And it was fascinating that I made a decision at that point that this is back in 2000, 2001, 2002, that I would start the people cleaning my houses and then eventually businesses. I started everybody at $15 an hour back then. And the reason was I wanted the very best, and I wanted a livable wage. Did it hit my bottom line? Yes. Okay, so but the thing is, I had employees and I had virtually no turnover for 8 or 9 years. Everybody wanted to stay because we took such good care of them. So this is a long way around to tipping. I know what we're allowed to pay. I encourage you all to consider, run the pro forma. What if you paid your employees a higher wage? And even if they're tipped, let them make that money on top of a higher wage. What will that do for, number one, your people, your customer service, and can you afford to do that? And so that is a personal view that yes, I know what we can do, and we can go with the minimum, but is that going to secure those employees and make them want to stay with you for a long period of time? That was my view. Sue, thoughts?
No, I think you got it. You're the expert on restaurants a little bit more than me, so.
Okay,
But to answer his question, Chad, if you have questions like that, certainly start with your SBDC director and we'll call John.
super. And I thank you. So, Brooke volunteered you, Sue, so I just took the ball and ran. So, okay.
There's a couple more questions that kind of came in. Amanda asked, I think this was back when we were talking about sales tax. Should we separate the sales tax and income tax in the same side account?
I would keep them separate because it depends on where they're going. If you have the income tax going to the feds or to the state and you have the sales tax going to a different department, it really, my recommendation with something like that is please talk to your CPA or your bookkeeper, but especially your accountant or CPA, and ask them what they feel is the best place for it.
And then there was a question, do DRAM insurance companies require a percent of sales to be food and a percent of sales to be liquor? Is there a ratio?
I don't know what it is here, but yes, there usually is a percentage, and I can do some research and find out for the next meeting if you would like. I just don't know that off the top of my head, and I'm still, I don't know what the laws are here in Iowa yet. So sorry I didn't have that answer, but yes, usually there is a percentage that needs to be food and on the liquor. So I will see if we can get that answer too for the next round. Okay, so I'm going to just do a little, I have some more here, that the income statement is an aggregate statement or a summary of income and expenses. So the income statement, again, is an aggregate statement or it's a summary of income and expenses. There's the key word for everybody. We talked about all three different reports, the balance sheet, the cash flow, and the income statement. This is a summary of your income and expenses. So the detailed income and expense information can be found in supporting schedules. Remember, I asked everybody to write down that number that we looked at back on that other sheet. It was 132, 143. This is the total that was transferred all the way back. I'm going to jump back here. I hope no one gets airsick. But remember, we had direct operating expenses. We put in a number, 132, 143. Well, how did we get there? This is critical, and this is where you as operators really need to watch your operation and know where everything is going. This is what we call an expense schedule. This is a supporting schedule to that report. It breaks down, we're looking at direct operating expenses, okay, and this is a breakdown of what made up that 132, 143 that we put into the income statement. Okay, you can run a detailed income statement that may show all this. That's kind of crazy when you're trying to assess it. You keep the supporting documents. My opinion is that the supporting documents, well, why is the 132, 143? What was that all about? My favorite one right here is China and glassware, 22,000. Expenses higher than budgeted because China's shelf collapsed on March 22nd. I just love that. You put in an explanation of why you had that. So uniforms, during that period, uniforms, the expense was $13,408. Laundry and linen, $40,968. So given that laundry and linen, I would suspect it's probably not a fast food restaurant. Okay, glass and china. We have silverware, you have kitchen utensils. Remember what I was saying? You need to keep track of everything that you purchase. And then bar expenses. Notice that this could be as simple as toothpicks or something. It's not a garnish. It's not oranges, lemons, because things like that went back into calculating that cost that we looked at based on what the revenue was for liquor. Now, this takes us to a whole nother level. You need to be savvy in understanding your operation and where things go. Again, I know I've stressed it and it does cost a few dollars, but I tell you, when I ran my business, I constantly would go to the uniform system accounts for restaurants, and it's been around that long. And the reason is that I would get things I didn't know where to put: flowers and decorations, licenses. Now, so these are direct operating expenses. And again, that will tell you, here's the total. So did that, I'm hoping that helped explain how we came up when you're looking at the income statement. Okay, it's great to look at the income statement. I'm going to jump back here for a second. It's great to look at this, but you as the operator, you as the owner, have got to know where these numbers have come from, where these totals came from. One thing I do like about QuickBooks in a lot of cases, that if you click on categories like that and you just use that magnifying glass, it sometimes jumps and it gives you a full breakdown in that area. So that's a different thing that we can chat. But so very important that now that you've looked at the income statement, you kind of have an idea of what it looks like and the different areas that we use in the industry. But now we're taking that deeper dive into how did we get some of these numbers? And the next round is going to be, for anybody, and I didn't say this earlier, but especially when I come to the formulas, you'll get these slides, but my students, when I'm teaching the college classes, and when I was doing them in person before COVID, I started laughing. It's like, I'm doing my lecture, I'm using PowerPoint, and they're all taking pictures. I said, are you all taking pictures of me? And they go, get over your ego. We're taking pictures of the screen we don't have to write our notes. So, and then it was ingenious. I was like, wow, look at this, cell phones and what they can do. So as you're seeing something that you may want to know, just take a picture of it. Okay. So that's this. So when we're looking at the supporting document, virtually every area of the income statement is going to have some type of support. And this all comes back to uniforms. How did we know it was $13,408? You're taking all the invoices, the bills came in, or the purchase came in, and you as the owner manager is taking this and posting it into QuickBooks, or you're having your bookkeeper post it into QuickBooks. And one thing I just real quickly say, and I may have mentioned it earlier, so many times people say, I can't afford a bookkeeper, or I can't afford what I say to everybody here is, let's run the numbers and see what happens if you freed up more of your time to concentrate on different areas and stop trying to do 20 different things. There are going to be days where you do 20 different things because people called in, whatever happens. My favorite is where I had my restaurant. Tour buses would just all of a sudden show up in my door just before closing. It's like, really? We have 50 some odd people getting off a bus and coming in saying, we want to eat. It's like, okay, everybody jump in, let's get it done. And we'd always do it. So those things happen. But if, run the numbers. Can you get somebody to support what you're doing? If you are so busy and you see that your business is going to grow, let's plan for the future and scale up and see if you can bring in a bookkeeper or another, assistant manager, or whatever it may be. So the key is all of these numbers just don't mysteriously appear. You are the master of your ship. You've got to know where all of this is coming from. If you have a bookkeeper, that's great, let them put it in, but you need to be able to go in and read and make sure that the bookkeeper is doing what they're supposed to do and classifying everything. Let's say if you have uniforms and you see it at 13,000, you go, wait a second, I only ordered 5,000. So you can start to go, why is that number off? But you as the manager have to know that. Also, when we're looking at why is this number important? Okay, especially food cost. And I have before we get done, I have this incredible sheet that I will share with all of you. By the 15th or 10th to 15th of the month, you will, by just following this one sheet that I use with many of my clients, they know what their food cost is running by the 10th or 15th. They don't have to wait till all these reports are done. It's a phenomenal sheet. that I will share with you and get you copies of it. So I'm jumping back here, food costs. Why are these numbers important? I know 31, 32% is what my food is running. What happens when all of a sudden it jumps to 40%, 50% for no good reason? Because you're on top of this, you're able to say, wait, something's wrong, and you know your business. I had that happen with my restaurant. I'm going, my food costs went from like 33% and it ended up going to 40, 42, 43%. And I'm going, whoa, what's going on? So I started looking, we took inventory, we went through, we checked everything, no, foods. And so we got rid of any mathematical errors. And I'm saying, okay, do we have waste and are people burning food or throwing food out that, you know, is not being accounted for? No, that wasn't the issue. So I got suspicious. I said, okay, inside job, something's going on within my operation. So I went over, I suspected that food was being taken out the back door. So I went over to my neighbor and I said, by the way, I'm going to be sitting in this car. I borrowed a car. I said, I'm just watching my operation. Someone's stealing from me, I think. So sure enough, I watched, and the crew came out, dishwashers, and they had the garbage bags, but two didn't quite look right, and they threw them into the dumpster. And so I said, okay. And then I waited, and sure enough, about 2 hours later, they came back and they went into the dumpster. They had been taking prime ribs. They're cryovac, but they put them in garbage bags and they were stealing them out the door. If I was not on top of what's happening in my operation, that could have gone on for months and I could have lost a fortune. Needless to say, they got fired. So, but this is knowing your financials keeps you from getting in trouble. I'm having trouble with my mouse is not cooperating here. There we go. Okay, did that. So I did the supporting documents. So again, just as I'm kind of reviewing some of this. So the income statement is one of the several reports that it's the document that you can use to help evaluate the success or failure of the business. And I just shared one of my stories. Because I was watching, I knew my financials, I was able to say something's not right. Did I know the answer? No, I had to be a sleuth. It was a lot of fun, by the way. I can't tell you how many cups of coffee I drank during that. Sitting there, I'm a good restaurateur. I can suck down coffee real good. It's just, I kept forgetting. It's like, oh my, there's no restroom nearby. So it's like, So, and then, however, the income statement alone yields essential information critical to the developing future management plans and budgets. It is imperative when you look at your income statement, when you look at, here's where I am, where do I want to be? That is part of your job as a restaurateur. Is I want to see people in business for 20, 30 years. For you to do that, you really need to step up and take control of this. And for those just starting out, what we're talking about, the pro forma, we're going to take our best educated guess. But I got to tell you, when we get done, it's usually pretty close. I had one operation when I was in the Virgin Islands. They came in, and it's somebody that wanted to start up a food service and distillery. And through this whole process, we did the concept, the pricing, and the cash flow, and the balance sheet, and the projected income. And again, all projections. And they ended up getting funded for $4 million for that project. And they're doing quite well right now too, by the way. So, so 6 critical areas that we look at with this is the sales volume, food expense, beverage expense, labor expense, other controllable and non-controllable expenses, and the profit. So this is kind of summarizing what you just looked at. Okay, we looked at the sales volume. This is just for the income statement. Okay, I'm looking at what my sales and volume is. I'm able to look at what my food expense is. Remember, food to food, beverage to beverage. the beverage expense. Then I look at my labor expense. Okay, then controllable and non-controllable expenses, what I can control, what I cannot control, and then what my profit is. This is so important for your operation. And again, just one of the reports that we look at. So if I'm looking at analysis of this, so I can determine my sales for a period, I can calculate these periods minus the last period sales, and then divide the difference in step 2. So I can determine my percentage of variance. This one, I will repeat this again at some point, but here's an example that I just wanted to show you. When I'm looking at my food sales, it said 82% and 81%. I have $2 million and I have 2,058,891. Okay, what is that really telling me? Now, as we go through this and we start this and into some more formulas, especially in the next groups, the next group session on Monday, stand by, because we're going to have some real fun. You're going to really start to understand what's happening with your numbers. And I can remember when I was in school and I aced the accounting and, did everything. And I think I may have already said this, but I aced all that. And then I got, so I knew how to do it on paper. But boy, when I got out in the trenches, when I first had my first operation, it's like, I felt like a deer in the headlights. It's learning how to take this concept and then apply it to what you're doing. So in this case, I just want to show you what I'm looking for is a variance. And that tells you a whole story that is important. I think my mouse is dying here. So really what I'm just looking at food right now. If the formula is what I'm going to calculate the periods sales minus last period sales. So in this case, I did 2,058,000. Last year, I did 1,189,000. So we're looking at the difference between this year and last year was $167,365. So what does that really mean? Did I do better? It's saying 81%. 82%. Now the percentages tell the story. If I take then the difference and dividing it back into, the key is last year's number. My variance, I have increased my food sales by 8.9%. So when I'm looking at that, I'm saying, is that it's really an operational call. Is that good enough? Is it not good enough? It's really up to the managers, the owners, whatever. But what you're able to do then is take this one step further and saying, my food sales increased 8.9% during last year to this year. That could be pretty good, or it might not be. Brooke, did you run the numbers?
No, you just added a 2. You see the 167,365. You added a 2 when you typed it in.
Thank you. I knew, all of a sudden I looked at this and I'm going, okay, this is what we call correction on the fly, and do it with a smile. We're in the hospitality business, everybody. These things happen. It's like when you dump a whole tray in front of somebody, it's like, oh, don't get angry. Let's just make it work. So what does that tell you? What it's telling me, thank you, Brooke, by the way, I really appreciate that. So this 2 is erroneous. It shouldn't be there. And so we're looking at 8.9% increase in our food from last year to this year. Some owners may go, that's great. Some owners and managers may go, not good enough. It really depends on what you're looking for your operation. So why can't we just look at the percentage and the difference from the sales comparison above? It doesn't really tell me. It's showing that, yes, compared to last year, I am at 80, that was 81% of my sales for food sales. This year, last year was 82%. This year is 81% of my sales. That's great. That's saying that's a comparison of saying what my sales volume was. But what I was looking for by this one extra step, which makes you, and any restaurateur, it makes you the expert in your area, is, well, okay, we stayed about the same, our sales percentage stayed about the same, but what about how much did my food really increase during that time? Now you are becoming the experts. And this is part of the financial boot camp that we're going through today, is to work on ways to make you experts in this area. Will you get it all immediately? If you do, bless you. And I think I'll go ahead and retire and make a fortune. But a lot of times it's just repeat. For me, I have to do repetition, try it over and over and over until I truly understand how this all pulls together. So we're here to answer those questions. So how much was the beverage variance? I did put the answer in here. It's doing the same thing. We're looking at this year's beverage sales minus last year's beverage sales. Okay, gives me I get the difference, and then I'm going to divide that number back into 415,099 for last year, and it's 16.3%. My calculator rounded it off to 7%. I did try the number and it did stay in balance. So if I were analyzing my business, okay, my beverage increased by 16.3%. Now, again, using all the tools in your arsenal here, if I go back, if I were to look at and say, okay, that, as I said, my mouse is about to die. My apologies here. So when I go back and look and say, okay, my food cost was 37%. Everybody kind of remember that? And my beverage cost was 20%. So if I spent time, it cost me less. Now, what would happen now if I made a decision to start increasing and finding ways in marketing and increasing my beverage sales? And let's say I want to hit 25%. What would that mean for my bottom line? You are now starting to be able to make decisions about your business that are based on knowledge, and you're making, really, in most cases, you're making decisions that support what you want for your company. It's well thought out. This is part of the reason for learning and working with all these financials. Just wanted to show you, this is from just one of my worksheets. I wanted to show you what the balance sheet looks like. And we talked about assets equaling total liabilities and owner's equity. Notice down here it says the balance sheet difference is 0. Okay. Now this is a projection that we do, that I've done with my clients. This is a sample of a company. It's not a restaurant, but the key down here is the balance sheet differences. Notice they're in balance. We have 227,406, 227,406. Assets equals liability and owner's equity. There's the formula. It's in balance. Again, you'll start to see that there are a lot of numbers in here. And if I wanted to make a decision as far as would I lend this operation money, okay, either on a projection or I'm actually pulling my balance sheet. If I look at the cash, the beginning balance for this sheet was, and this is always current, right up to the moment, 58,000. At the end of this year, at the end of that year, I only have 21,000 cash in the bank left. And the end of the second year, my projection was 14,000. That would be sending red flags to me or to a lender. The other thing too that I look at real quick, one of the first things I look at with my clients is going to look at the long-term debt, which is most likely some kind of loan. Does the revenue support, can I pay my bills for that? So that's one of the things that this sheet would do. And I'm just giving you a quick overview. This one, don't let it overwhelm you in any way. It is, we have revenue and expenses. Here's the bottom line. This is a cash flow, a sample of a cash flow sheet. And I'm looking at, we started out with $58,000. When I do all these projections, here's what I think we're going to have in expenses. Here's what I think I'm going to have in revenue. This model that I've created, again, there's that 21,000. I've gone from 58,000 to 21,000 in my first year. I might be concerned that I've lost 50% of my value on these projections that I think that we can have. Can this be corrected? Absolutely. That's the beauty of doing these worksheets, is analyzing what you've done and projecting into the future. Okay, so one of the things that we were talking about, these are just, I have a list of different, I just went on, there are all kinds of great point of sale systems that we had talked about, and these are just some of them that are out there. We all, if you, just depending on who you talk to, which one you like, do your research, get online, see what they support. There are some out there that, and I will share a video next round that, or I'll send it out to everybody, that is the top 5 restaurant point of sale system. It's a pretty good YouTube video. What it's doing though is just comparing, and it was, I would say it was really fairly done. In other words, they weren't promoting one over another. They were doing a good job in just saying, here are the features of this one, here are the features of this one. So I thought that was pretty good. And one of the, we're kind of winding down for today, and 2 things I want to do is remind everybody, this is a great map of our wonderful state of Iowa. Look at all these great resources. The red areas are dividing where you can find your person, the people that can help you out in your region. And just reach out to the home office. They're fabulous at connecting people. So you use those services. And time for questions. And I'm going to stop sharing for a minute because I want to pull up one additional sheet. So as you're asking questions, and I hope you have all found this useful. So
Yeah, I don't, not any questions yet. So if you have questions, I will say that I always tell people, even if they don't want to do books and they're going to hire a bookkeeper, this type of lesson is so imperative to any type of business, because if you are sending your books to an accountant without knowing how to read them and not knowing what they mean, you're not going to know what your bottom line is.
bravo.
Brooke, I bet you can confer with me, but especially through COVID, it was so surprising to find businesses that had no idea what their books were like. You know, they had to get a hold of their accountant, and so did 500 other of those accountants' clients have to get a hold of their accountant. So not only did they not know what was going on in their financials or understand it, but they didn't have ownership of it, that they could just pull it up.
Yep. Bravo. So well said. So I thank you. And I can't emphasize that enough. Even, you know, just what you said, even if you have somebody else doing it, or you have your significant other doing this, you have to know it. You just can't assume this. So what I'm sharing here is just something again, this is a sheet that I use specifically for restaurateurs. Anybody in food service, food truck, you know, I say restaurateurs, but anybody in food service. We have something that's really kind of fun. We put in certain information, food costs, what our beverage costs would be. Okay, so what we're looking at is building first the cash flow. Okay, so notice over here, this is so important. We just got done with the profit and loss statement. Notice the different sections of the cash flow sheet that go to the profit and loss and to the balance sheet. So not everything is what we were saying. Not everything is going to the income statement that you do. I'll give you an idea. Let's say if you were going to get a loan, let's say 150,000 over 10 years, 4%. So your monthly payment is estimated to be at 1,519. for the year, 12,000. So it amortizes over that 10-year period. Okay, so you can actually see what you're paying. The nice thing about this magical sheet that we have, that we use, I need a loan for my business, so I'm going to go into year one. Oops. So staffing we also do. So when I'm going in 150,000, I was trying to get someplace. Here we go. So remember that, you know, people don't realize that if you're getting a loan, two things are happening. One is that your interest expense from the bank loan is a profit and loss statement item. And your principal for that loan is a balance sheet item. So remember, this number is not showing up in your income statement. And thus, this is the key. You know how I said the profit and loss statement says I made $600, but yet I have no money. The reason is these areas, not everything shows up on the income statement. So we'll go through this a little bit more, but this sheet is really neat as we go in and do the projections. How I do this with my restaurant clients is we start out first with, I'm just going to take one area that we're going to say I have a 30% food cost. Okay, it can be anything. We'll go through and do this. And even I'm going to show you, if anybody does credit cards right now, they're not free. So what percentage of my retail sales will be by credit card? I'm going to say 95% of all my customers use a credit card. And what is the discount rate that I have to pay? Let's call it 2.5% that you have the honor to pay the credit card company. So now that I've put this in, eventually what it's going to do is it's going to come back out over here as a formula. So I'm just going to do a quick thing with just the first thing I do with the restaurant tours is that we calculate out how many, and it's tough because a lot of times we want to say how many people we're serving. I want to know how many dishes I plan to serve. And we have a whole formula that we go through with this. But let's say food sales that I served in 1 week, I served 200 people. Okay, I'm taking a shortcut. I can track it hourly, but I'm taking a shortcut. So what it does is it multiplies this by 4.33 weeks, which is the average over a year, the number of weeks in a month. So this one says, I will serve in a month of January, I will serve 866 people. Liquor, I'm going to sell 300. So it's a bar. They're drinking a lot more than they're eating. Yay. Okay, so just to give you an idea, so that's step number one. We would figure out when you are serving, and so you figure out the number of plates that you are serving, and it automatically calculates out to give you a monthly total. And I'm just going to throw in a number. What is it? 860? No. I'll just do the same thing. 250. I want to have quick 2 months in here. I just want to show you how the sheet works. Okay, so that's the first step that we would do. That's step number one, sales breakout. Then what I do is we go through and we would actually figure out what the average sale would be. How much you notice how this area that was blue, again, this is part of the Excel formula. So let's say my average food price is $15. Okay, I'm just pulling numbers right now. Okay. Oh, I put 15. I would like an average sale of $1,500 per plate.
Yeah, that's pretty optimistic, John.
Yeah, I think so. So let's say in this month I increased and I had $16 and my average drink is $8. And so I'll just keep that the same. Look what this starts doing. It starts calculating out based on the number of people, number of plates I'm going to serve, and we work. I have this great formula that we figure out the averages, and then we come up with an average. What is the average on this? And there's a whole segment that we work together. I'm just taking a shortcut here. And then look what happens in year one. Okay, look at that. The revenue, the Anticipated revenue comes in, incorporates into your cash flow statement, and the food cost that I put at 30% is automatically calculated. Forgive me with a B&O tax. That's something from the state of Washington. I have to take this out of here. Credit card fees. Remember we said 95% would pay 2.5%. It automatically calculates that out. And so we're saying we made 16,000, so the ending cash position is not looking too bad. Now I don't have any other expenses in here. Watch what happens to my cash position. Do all of you like to work for free? I don't encourage you to do that. So let's say you said you want to make 5,000 a month for you as a salary. Okay, what we're looking at then is, I just did 2 of them. My cash flow, that it directly affects my cash flow, the cash in the bank. But what you're doing is you are now projecting where you think your company is going to go. So the first part, the QuickBooks, everything that we're looking at was actual. We look at the actual and we run the same reports. And then I encourage you to look at the future. But look what else this sheet magically does for you. It fills out. Now, of course, this is not done. It automatically, from filling in the cash flow, we have it designed that it's going to also fill out your balance sheet so you can tell what you're doing. And it also fills out your projected profit and loss or income statement. Isn't that pretty neat? So these are the tools that we have available for anybody. I really encourage you, if you're starting out, work with us. I can take you through how you would do this. I always send clients a master copy because this sheet is very easy to corrupt. If anybody has ever used Excel, to me, it's not if you're going to corrupt the formulas, it's when you do. You have to have that backup sheet. So just wanted to show you these 3 reports. This is everything that we are looking at, and we were analyzing the income sheet today. Notice how most everything shows up. There's some more categories. If we don't use them, that's fine. Okay, but these are all the different categories from your expenses. In this case, we spread them out. If I were doing the profit, and if I'm doing the income statement, profit and loss, when I'm printing it, I most likely would have, I would like to put this information in separately so I can see it all together. Or you can put it all together in the, what we call that supportive document. It's up to you on how you run this. This sheet also shows you ratios and what the break-even points are. So this is just one of the many tools in the arsenal, but it really comes down to all of you just really looking at what it is that you want for your operation. I don't have that magic number, but we can sure talk it out with you on the very important items. And I think with that, next session, I'm going to really go into some of these. How do we get these numbers? How did I come up with the food cost and things that people just a lot of times in our industry take for granted? So be ready to take pictures, and that will really strengthen you and give you that power that you need to go in, and whether you're doing it or, as Sue said, if you're going in and monitoring what your bookkeeper or CPA is doing, you are now in control. And just like serving great food and having wonderful hospitality and having unique presence, you are now adding strength to who you are for a longevity. And this is, to me, this is critical. I learned this the hard way, or my family learned it the hard way. It's like, my dad went in and bought a restaurant up in Mount Kisco, New York, called Cerise. And he got a row of front, no parking in the front, parking in back. He said, oh, we have such great food, people will come. Well, they didn't. And he didn't keep track of his financials. So needless to say, nanner, dad closed his business. So, and I didn't. So that's always fun when you can get back at a parent's site. So any other questions, as I think we're rounding down our time here for today?
We've got one question. Jerry wanted to know, taking pictures. The problem is if you want to take pictures, you have the information right then. We will be putting together the PowerPoint where you'll get it. And also we'll be editing and putting together a recorded copy of this later on. But if you find the information, you're welcome to take a picture of the screen just so you have the information right now.
Super. And just personally, I really want to thank everybody that's here, especially all of us that have been in the restaurant business. I know how busy you are and the chaos that can go in to running your business. But you took the time. Kudos and congratulations on doing this. Stay tuned for step 2 because it's going to give you that power to make these decisions.
Thank you very much, John and Brooke.
Have a great one, everyone.
Yep, have a great one. Bye.
Bye.